Hello, 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 hello. Welcome to Radio Free Wall Street. I love doing this, and I try to make it something that's special. Like, you don't always get it. You know, it's like anything else. Some days you got good days, some days you got bad days, and some days you got great days. Well, now this is a good one, because sometimes little things happen that the traditional press doesn't understand. Now I am not about to bash any publication, any organization that is making information available, whether it's fake news, no news, underground news, deep state conspiracy. Bring it on. We need information, okay? We're information consumers, and especially you in our group, we're not that stupid. We're not going to get tricked that badly. Now, the problem is that I remember I approach all the news with the financial perspective, okay? My job is as the last of the analysts. I mean, we don't have analysts anymore. We got algorithm guys that are trading trends or trading movements. But as far as hardcore fundamental analysis, organizations don't do that. People who have that skill set are disappearing, and you're left with an algo guy which is trading a moving average or a velocity indicator or volume at different price points, okay? Now, where I've honed my skills is that I do both, okay? I look at the fundamental analysis to tell me what a market's going to do, and I look towards the technicals to show me how it's going to get there and help me do my get in and get out kind of thing. And the reason for that is that everyone's concentrating that. And algorithms now show what every position you have in your account. They know how much money you've got. They know how much margin you're holding. They know a history of how you've acted. They know what your blowout point is. They know what number you can stand. It's a kind of amazing situation. I've put several brokerage firms out of business that tried to trade that to their advantage with our mighty army of insiders that cut them a new asshole, and they have dried up and blown away because they just didn't count on 5,000 or 10,000 people that knew what they were doing because they weren't supposed to be making money. Now it's just such time. We just had the privilege of helping some people on the spread trade, get early spread trade firms, and a couple of the pompous prick, and I really hate those guys, by the way, pompous prick traders going, you asshole, yeah, right. Now just pack your shit, get out. And you want to put us to spread to 12 because you believe some theoretical 15? Bye. We don't need you. Okay, now, for today's news. Sometimes stories come along that don't get the proper weighting, okay? And they don't have the proper understanding. Now, part of the situation with Donald Trump was because he was such a nerd about his understanding of finance. Really. Builders don't understand finance. Builders understand borrowing from broke. They understand laundering money in the buildings. They understand tax shelters. They understand hiding money. But they don't understand economics. It's not part of their should we say, modus operandi. Now, Donald Trump has been particularly poor in that, and Cohen had to leave. He just couldn't take it anymore, and now you got Kudlow. The difference is Cohen was a strong man. Cohen had a reputation he had to protect. Cohen wants to be back in finance and investment banks. Kudlow was a washout. I mean, nice guy, don't get me wrong, but a washout. No one's going to touch him. Was always never a great trader, never an economist, and never really knew what was going on. So Donald Trump's found the right guy, found a stooge. Now, Kudlow, to his credit, is half sold out. And so he's buying into this trade war shit. Oh, I'm convinced. And he's trying to educate Donald Trump, should we say, economically. Now, you can tell by this because Donald Trump has indicated he's not happy about the Federal Reserve interest rate hikes. Now, in that is millions of dollars for you. In that is the secret sauce. See, I've always told everybody, if I have a choice between fake news and no news, give me the fake news. Let me hear the bullshit. Let me hear them over and over again. No collusion. Russia, if you're listening, okay? These are little tidbits. These are the founder. Because I'm the guy on a conference call or talking to the press department, they're feeding me full of shit, okay? They're not going to. No one will admit they're broke until after they're broke. Okay, no banker that knows his book is going underwater is going to tell you. No trader is even going to let his bosses know in the world we live in that how ugly it is. And with swaps and transference of risks, there's a lot of ways to play that game. Okay, now What am I getting at? What I'm trying to explain to you? Donald Trump has got himself a big ass shit. Now, as much as I dislike him, and in my opinion, justifiably so, the reality is the recession that is coming has nothing to do with Donald Trump. Has nothing to do with his tax cuts. Has nothing to do with the dumb shit stuff he's done, like increasing the budget deficit. It has all to do with 10 years of quantum easing, 10 years of free money, 10 years of a Federal Reserve that decided that in this day and age, they did not want to have a 1980 situation. They did not want to have a recession. They did not want to have a depression. They did not want to have massive banking failure. See, one of the hallmarks of the Great Depression was the Federal Reserve was clever enough to let the dead broke banks go broke and stay broke to their credit. Now, it was painful as hell, but coming out of that, you had an American banking system that was strong and vibrant. You had businesses that were poised to grow. You had discipline in the marketplace like, hey, asshole, you better not over-speculate because you can go broke, okay? And that created a certain understanding of risk and risk profiles and risk parameters, okay? And you don't need a computer to figure that shit out, just so you understand that. Now, what happened was we have created this next generation of loser, boozer, drug users, literally. And I can tell you that the trading desks go, I don't give a shit. You know and I know that no matter how badly we trade, no matter how much money we lose, we're going to get bailed out. And that means I'm shooting for a moonshot. Because a moonshot makes me great, okay? Moonshot makes me, a mega millionaire, and my life is set, and so I might as well go for the brass ring. And you go, aren't you taking excessive risks with the firm? You don't. The firm doesn't understand the risk. The firm doesn't understand risk profiles. Rule-based trading doesn't allow for that. They do not understand the transference of liabilities. They don't understand swaps. They don't understand derivatives, and I'm glad they don't. All they know is what the little computer program tells them, and all they know is the Shoals model that allows them to call losses profits, and profits twice what the profits are. That's the world we live in. Now, that was reaffirmed by a Federal Reserve that refused in 2007, 8, 9 to let the banking system go. Remember, they bailed out everybody, AIG, Merrill Lynch, Salomon Brothers. I mean, they just created for themselves a consolidation of risk, and they allowed for $1 trillion in capital entities. Now, you may not understand that, but what it means is that the businesses have gotten so large that they can't be managed. They've got so large that it's impossible to have a risk profile. You've got a situation like Wells Fargo. They've gotten so big, and there's so much pressure on sales that the sales department has the power to literally sell their client base bogus things. Let me tell you something. In my way of looking at things, my clients, my core group, they are my life. They're my everything. I treat them like gold because they're with you thick and thin. They know that you've got their back. They know that shit can screw up, but it ain't going to be screwed up because you're trying to pimp them into something or sell them bogus shit or have a pop-up and sell a special report and all this crap that goes on, okay? And the problem in my business is that the entities have turned their analysts into salesmen, and their people into creatures that dump shit on the customers. See, when the fund sells you the XYZ, this is a special action, community action fund. He's not selling it to you because it's best for your retirement. He's not selling it because he believes in the product. It's because the funds have learned that they pay the highest commission, run specials, do this crowdsourcing kind of shit, and they do a lot of that. They get more sales, okay? So therefore, the line has been crossed where there is no one to take the side of the little guy. He's basically on his own, okay? And most of the time he doesn't know that. The banker's not his friend. In the olden days, banker's job was, okay, let me shop the market for my client base. Let me help my businesses grow. Let me get them the best loan at the best terms. Let me help them manage their money and grow because they grow my institution. Now, get them in, get them out, screw them twice, dump them, okay? Get on, get off. Get in, get on, get off, leave $10 on the pillow and get the hell out, okay? So it's that kind of whore mentality, which honestly makes for a wonderful life for a guy like me that understands how to trade, understands markets, understands the value of client loyalty, and understands that you owe people, okay? So there's a place for guys like me in the world. Now, part of that is the analysis. In other words, part of it is that day and night I consume massive amounts of information personally because you can't pay somebody to do your thinking for you. You can't pay somebody to analyze a market for you. You have got to do it yourself. And that's always been what the hallmark is, okay? And also you've got to make sure your numbers are right so that you can provide the service, okay? When these people have underbid their product, they can't take care of their customer because the revenue is not allocated to that, okay? And that is really one of the great crises of our times, is that businesses are set up so they don't give service to their customers. Businesses are set up so that the customer is a revolving door situation, and I got 50 million more of them, and that is really the thinking. So, let's get back to Donald Trump. Donald Trump inherited this cockamamie thinking, then it gets all back to the Fed, where the Fed is saying, okay, we're not going to lose any financial institutions. We're not going to have the pain of a wipeout. We're not going to let traders pay the price for trading stupid. We are not going to have financial institutions full because they've gotten bad paper. So what have you done? Well, what you got is the whole financial world, especially the Goldman Sachs, the mega banks, that are chock full of shit, okay, the Blackstones. And what you've got are debt obligations that can never be paid that are disguised as assets in the financial institutions of America. Now, hear me again. There are still the losses, still the derivatives, still the paper that went bad during the wipeout, and more added to it. You still got a structured debt problem. You still got a swap problem. You still have this incredible market that only survived on free interest rates, free money, and only survived on basically not a forced liquidation, okay? They're not marking to market. And I can tell you as a trader, you want to mark your book to market by the second. And once you hit your loss parameters, you dump that shit. You don't get bailed out. And you may have very high loss parameters, but you've got to understand that every win can be a loss, and not every loss can be a win. If you understand that, then the risk is such. Bankers do not belong in as traders. Okay, you have merchant banks. You have trading banks, okay? And you have your friendly neighborhood Bob's Bank. Bob's Bank has no business trading with his customers' money, and that's what he's allowed to do, okay? Now, as a result of that, you have huge losses that are untenable. You don't want to go to the public and say, hi, we wiped out your retirement, we wiped you out, we wiped out your money, we wiped out your life, and so sorry. Now, reality is that at some point the losses have to be taken, the losses have to be realized, and you've got 10 years of rolling this big ball of incredible lost money. Now comes Donald Trump, Federal Reserve. Like I said, it wasn't Trump's fault, this part of it, I'll explain it to you. Federal Reserve realized that, holy shit, we have 10 years of stimulation. We have 10 years of bad deals that, because there's free money, are not being realized. We got 10 years of God only knows what structured debt that can never be paid back. We have 10 years of too many malls, too many shopping centers, too many retail spaces, too many factories, too many cars on lease, too many credit card, too many loans on students going to college, too much of everything. Now, the Fed understands that what they have to do is wind that up. Now, when you hear about the Fed raising rates, well, basically what it's doing is increasing the source of money at source Perrier. Remember, the source of money gets leveraged and leveraged and leveraged and leveraged. A 0.25% Fed fund rates gets leveraged to a 16% credit card rate. A 3% Fed fund rates gets leveraged to a 25% credit card rate. You understand? Now, there's a whole complicated mechanism of how that all works. Same thing with your mortgages. The same thing through the whole sphere, the whole strata. Now, the problem is that as the juice to the loan shark gets higher, the ability to pay gets less. Very simple, okay? I mean, they break your legs at some point, okay? Now, we don't break legs. We just let businesses go broke and throw people out of their houses, and it's still a plain old nasty game. That is why people should be debt-free. The reason why is in our system, nowadays, debt is too risky. Debt is too risky because markets are too volatile. Now, the Fed has got a huge balance sheet. I mean, they got a lot of money on the books that they've absorbed to provide liquidity. Give me that debt, and here, give me beaucoup money. And that was an exchange, okay? That was a swap, in essence. You have a swap of the Fed swapping debt with financial institutions to provide liquidity and then giving that liquidity at extremely low rates, okay? Now what's happened is the banks, instead of saying, well, let me clean up my book. The book is what the traders are holding. Let me clean up my book. They're going, well, shit. Let me leverage my book because I got a lot more money. And what happened? Well, the dipshits leveraged their books and lost even more money. Reality is the trading books of financial institutions, and they'll all deny it, are chock full of shit instruments that don't work, chock full of bad debts, chock full of stuff left over from the last financial crisis that will be part of the next financial crisis. And the problem is the system has no room for error, it has no margin of safety, and there's no cushion. And the Fed knows that. So the Fed has moved to, one, deleverage its book. That means get rid of the paper it's holding, and they've not been successful at it. They're finding the market can't absorb it. That's one problem. The second problem, the Fed realizes that there's another recession coming. In other words, they know, and believe me, they know, there's a whole lot of bad debts in the banks. There's a whole lot of businesses that with too many hotel rooms, too many restaurants, too many McDonald's, too many Subway shops, too many Starbucks, too much money given to corporations to do too many things that are not going to ever be able to be paid back. So what they want to do is force an order of liquidation. See, whenever you see a bankruptcy, whenever you see a business failure, that is the capital system redeploying capital that was erroneously spent. And that's a very painful process, okay? So now you have to understand that is what you know as a recession, okay? That's why bankruptcy was built into the system. Bankruptcy says that if you foolishly loan money to someone, they don't have to pay you back, and you can't hold them in pillory, and you can't put them in debtor prison, because in the capitalist system, we want to flush the bad debt. You took your loss. You took your loss. See? To remove loss from a market, to remove loss from a trade, to remove loss from a loan is to create a lack of discipline, okay? I'm a trader. I've been a trader all my life. Loss is part and parcel. In fact, every trade I go is what am I going to lose? What am I going to make? What's my loss parameters, okay? First decision. How much am I willing to lose, okay? And I take my loss. Without that discipline, I can't make money, okay? Without the fear constantly of, oh, my God, if I screw up, I'm going to lose money. I'm going to lose my ass. And, oh, yeah, if I do really good, I can make a lot of money. Now, that fear of loss, that realization of loss, that accounting for that loss on a minute-by-minute, second-by-second basis is the ultimate discipline for a trader. I mean, I'm not talking dildo breasts. I'm talking people who know how to trade. Without loss, without a fear of loss, without accounting for the loss, without knowing that the loss exists, you lose the discipline that keeps you sharp. You know, it's like in a battlefield, the bullets are whizzing by. That really gets your attention, okay? You aren't going to run out there and get a lollipop, okay? You're going to really understand your game. And the successful warriors understand risk, and they understand how to account for risk, and they understand prices you pay, okay? Now, we have a system where a lot of the traders, thank God, don't have to realize their loss. They don't have to suffer the consequences of being wrong. They can go ahead and hide that loss. Now, the problem is, what it does is, it creates losses that aren't manageable. Now, we've just seen some of the biggest oil trading firms take huge losses, which have not been realized yet, and have not liquidated all the positions because they create a spread between the oil in America and the oil in Europe very wide, because their assumption was that American oil couldn't come to market. So therefore, since it can't come to market, there's no customers for it, the price is low. The problem is it was a bullshit assumption, and a $14, $15, $16 spread between U.S. oil and between oil in Europe was incorrect. They didn't understand that the frackers are going to get that oil to market. They didn't understand they're going to lay plastic flexible pipe. They're going to fill up trucks. They didn't understand that ports that were not regarded as oil ports because super tankers couldn't get in there, what would they do? They brought in smaller boats. So the marketplace completely adjusted. They didn't understand that China would have every incentive to buy U.S. oil that was cheaper and also use it to make their balance of trade deficit look better, okay? So what's happened is you have a lot of very bad decisions made because disciplines removed from the market. One of the biggest crimes of our times was the Shoals model with asshole pieces of shit, they got a Nobel Peace Prize for it, that allowed banks to consider risk. In other words, hide losses. That's basically the only big bullshit. I don't give a shit what the algo guys tell you. Okay, the algorithms are not designed to give an accurate picture, despite all the bullshit and how many Bibles they want to swear on it. And so institutions are flying blind. Managers are flying by. Traders are having a party. Okay, So we're just seeing now some key traders, some heavy-duty guys, who, by the way, I never understood why they were there to begin with, at very large firms that just bought their firms huge losses because the dumb son of bitches tried to dance on the spread, okay? And I have to admit that in no small part we helped them over the edge. So if you don't understand your fundamentals and you're strictly using an algorithm, the algorithm is showing you're making money, and you've lost the discipline, the algorithm will really ruin you. And when the story of the coming stock market wipeout happens, and the coming depression, it will be these complicated mathematical models that weren't based in reality. It was high-velocity trading that was using positioning profiles that are valid for a long time, but when they go bad, they go real bad. And my algo friends, screw you, kiss my ass. I know you're sitting like, oh, our model's perfect, okay? No, it isn't. And let me tell you why. By the random nature of the universe, you cannot calculate everything in your model, okay? And when you assume your model's correct, again, when you don't have the discipline of where you're at in a marketplace, you make mistakes. And that gets to the Federal Reserve. The Federal Reserve pumped too much credit into the market, and they're never going to admit that. The Federal Reserve allowed 10 years of easy money to get way out of hand. And the reason why was they didn't know how to get out of it. I'm going to repeat it again. I know some of these guys. They did not know how to unwind it, and they were scared to death until finally they have no choice. So the statement is, do I get out of it, or do I create an even bigger problem in getting out of it? So Donald Trump is saying he's not happy about the Fed raising interest rates because Kudlow finally sat down with Donald and said, here's the crayons, get the pink one and the blue one, okay? And I know you don't want to sit there for reading any briefs, but let's draw a picture. Here's a picture that's called a recession. It's called you're not going to get elected. It's called an economy in a downturn, and the Fed is raising rates, and they're going to cause a recession. Bottom line, the Fed has got to flush the toilet on these markets. Now, understand this. Another problem to the Fed's horror is that Donald Trump is moving into these trade wars, which means that revenue streams that will allow businesses to offset losses are being lost to them. Okay, the export markets. Now, the Chinese are playing a very smart game because remember, they're over-leveraged, and they've got too much credit and too much bad debts in their market, as do the Europeans. So what you've got is the world sits on this huge debt pyramid, and this debt pyramid has gone out of control. And central banks realize that. The European central banks were on their way to remove their quantum easing until they got up to the Italian banks. Well, you know, with $250 billion would be nice, and another $50 billion in Spain, and maybe another $100 billion spread around, and all of a sudden they go, holy shit. So that becomes the next curse of the central banks is that, well, we'll grow our way out of it. Now, you know how you're hearing about GDP growth, GDP growth, GDP growth? Well, if you got a growing economy, then that growth hides the losses and kind of covers them, okay? So that's why the big push. Now, the problem in mindless growth is that you create even more bad debt. You make even more financial mistakes. You know, there's an old saying that, you know, no, you're not a smart trader. It's a bull market, stupid. And the translation means when the bull market's over, then we find out how stupid you are. And that's exactly where you're at in the United States of America. These BlackRocks and these entities and these vanguards are not smart people, okay? They have not made smart trades. They're in a bull market created by an abundance of liquidity that's now being removed. And the fact of the matter is they do not know how to handle the removal of liquidity. They don't not understand where their real risk really is. They don't understand the yield curve. And so now it's a lick and a prayer, bullshit yourself, bullshit everyone else, and hope you come out of this alive, and they're not going to come out of this alive. The complication is that Donald Trump realizes that. And that's why he's really pissed off and has done something the president's not supposed to do because the Federal Reserve is supposed to be evidence. Now, Donald Trump loves dictators. And, you know, you got a dictator in Turkey. He put his son-in-law in charge of the central bank. You got Putin that, again, has his oligarchs handling his central bank. And what you've got is a whole lot of people that are in positions in these banking institutions, I'm talking about on the state level, that don't know what they're doing. And what's happening is the days of that latitude over. See, you can bullshit a certain amount of time, okay? You know, the bigger the business is, the more losses they can hire. And like I said with the banks, you know, because of the accounting, you don't know the banks are broke except when they just don't have the money to pay the electric bill. I mean, it literally is that bad. So their balance sheets are showing a profit. The entities that went broke, including AIG, who went broke, and including Lehman, all had stunning balance sheets showing all kinds of profits that weren't real, okay? And profits disappeared. Now, we're in the same situation again. So Trump realized that the Fed, that is going to get the Fed fund rates to 3 by this year, 4 and 5%, realized that a 5% Fed fund rates takes the 2-year 2 points above the 10-year. That's an inverted yield curve. Now, we are right now at a 2 and change, 2.7, 2.8 on a 10-year, and you're at a 2.5 and a 2.6 on a 2-year. Okay, so that's the spread differential with guys like me do complicated calculations to figure is extremely low. And that, to a guy like me, says, okay, that means a 30-year bond is going to work. That means the strip's going to work. That means the rates are going down, and you can project a negative yield. Okay, complicated, but how you're at this early in the stage, how the yield curve is acting with the movement that they've given you, now projects forward how much bad paper is there, right? Because these guys are still having to handle float in that deck. So we now know that by what we've seen enough of this thing, that you have got a 10-year at under 3%. That's yielding more than the yield of the S&P 500, okay? Which means that with all the risk you're taking in a stock market, a plain old U.S. government bond guaranteed to be there gives you a higher yield and safer. And that's something Wall Street doesn't want you to know. So that is where the differentials come in, and the complicated strategies and the complicated swaps, and the complicated instruments people use to spread debt. Let me tell you the whole secret. The secret is, right now, as we're talking, you're putting your bad paper in the hands of your less sophisticated. So what it is you know what a swap instrument is? A swap instrument is where someone is very, very sophisticated, figures out how to put all his liability in a retirement account where you go, well, what is in your XYZ douchebag $1 million a year retirement calculator? Well, I don't know. It's called Great Opportunities in Douchebag Shit. Oh, okay, so you don't know what you're holding. Well, no. Well, what are the rules? Is it a rule-based fund? I don't know. The guy said make me lots of money, I can retire and have millions for my retirement. Okay, so you got a whole lot of people, and probably you maybe if you're not careful, that got all kind of holdings and all kinds of douchebag stuff, and all you're looking at is that little sheet says, well, how much did I make this month? How much did I make that month? And the reality is, what they show you on paper profits is what you see is what you don't get, and when it gets time to liquidate it, called the liquidation value, that's when you find out that that isn't there. See, that's why they're buying Venezuela debt. That's why they're buying Puerto Rican energy bonds. That's why they're buying 100-year crapola from Argentina. And that's why they're buying that Brazilian shit, because the yield is really, really high. And as long as they can show that yield, then they don't have to report to you that when it comes time to get the principal, that's the do-re-mi, back, there's no money, because it makes them look good. So it looks good now, wipes out later. Shoals model. And the whole system is fully corrupt with that. And Donald Trump is realizing, because Kudlow explained to him that, you know, as these interest rates go higher, this economy is going to slow down. Kudlow said this. He said, you know, we're going to go ahead and have 2 really good quarters here. Okay, that's 4% plus. That's because of the tax break bonanza for billionaires, the stock buyback, the payouts, right? Well, if the money had been invested, you wouldn't have gotten a 4%, you would have gotten a 2.5%, and sustained to a 3%, and you would have had a moderate growth rate. But since there was no rules of engagement, no rules of investment, party time. We just did a story about how BlackRock announced how their earnings per share were really high, 55%. Well, what they didn't tell you was that they bought the shit out of those shares, so there were less shares to do the calculation of earnings per shares. They make an idiot out of you. They don't tell you, oh, IBM beat the street. They didn't beat shit. Yeah, their earnings were 22, and they said there was, and we're projecting 21, and it was 3 cents higher. That's because they set a lower expectation to make the numbers look good. So the games on these companies that are making up all these trading accounts and making up all these entities and all these stock market things are full of shit. I've never seen more dishonest, full of shit balance sheets in all my years in the business. And Donald Trump's realizing that as the Fed raises rates, what would seem like very small, what's the difference between a 1% rate and a 4% rate? That's the whole difference between a financial system that can hide losses and one that can't. Because of the way the leverage gets spread out, the way the swaps go down the chain, and the way those very small rates become very big ones, okay? See, that's source Perrier, free reserves with banks. As a free reserve of a bank becomes, $1 becomes $1 million in leverage. It's kind of incredible if you do the calculations. So we are now at, and this is the whole thing, Donald Trump is really realizing, and Kudlow is kind of preparing you for 2 really good quarters. So what we want to look at is really good economic growth could be a top 4% for a quarter or 2. Well, what the hell does that mean, a quarter two? What about the quarter or three or four or more? Well, never mind. And that's why Donald Trump is hoping to win to get these midterms through before the economic disaster starts hitting, before reality sets in, and when he comes to the presidentials, I'm not sure what he's going to do. And he's not either. Because the thing is, when does the hammer fall? When does the sword, drop on the president? He has to deal with collusion. So, for us, our model is very simple. We want to take advantage of what is a coming recession that cannot be avoided. Now, the other side of this is that because of these trade wars, and that's the full circle around, that, now this is the dumbest shit Trump did. You're in a trade war, okay? The U.S. dollar is rising because the U.S. dollar is the best currency. U.S. rates are higher than everyone else because we're having to raise rates first. And U.S. government instruments are the highest yielding, best investment ever, so everybody wants to buy them. The problem is that that's sucking more people out of their currency, buying dollars. That puts a lot of money to the Treasury, and that's why you're not going to have a debt crisis in America. But the problem is that businesses, because they're dollar-based, are having their costs go higher, and people who are yen-based, and that's just started recently, people who are euro-based, and people who are the Chinese ringgit, wang, bang, bang, chang are having a field day. And China is very quietly manipulating its currency lower and giving it advantage. So whatever Donald Trump does to them is being undone by the fact that their currency gives them a complete, incredible edge. And now you have the unfolding disaster. So the trade wars now drive you into a stronger dollar. They drive you into higher interest rates. They drive U.S. businesses into less sales because their currency differential is going against them, and their cost base is different. See, despite all the bullshit, it sounds nice. But the American worker cannot compete, okay? American worker, by God, bled, blight, and blue, I appreciate your service. I love the flag. Stand up, you son of a bitch, and kiss the flag. That's all nice, okay? And that's all rhetoric. And every dictator does that shit. Heil Hitler. But the reality is simply this, that if you want to pay a U.S. worker a living wage, okay, in a modern society, he can't compete with the Indian worker at $1 an hour. He can't compete with Tingling in China because they don't make any money, and American workers won't live how they live, okay? And they're all using the same equipment. They're all using the same machines, the same technology, and they all have the same skill set. So what's the difference? The difference is the prosperity of the workers in the competing market. And that's why car manufacturers can make a huge amount of profit because they're paying that Mexican worker $5 an hour, and he's happy living in a 400-foot cement block a room with paint on the side and a piñata for the party, and he's very happy, getting that old Volkswagen and keeping the thing running on the road, because he doesn't need an F-250 pickup truck, with the leather interior and the LT package. So it's a whole difference of expectations, it's a whole difference of cost, and reality is that you can't make America great again. You can't make America great again unless you make American workers as poor as their counterpart in Mexico. And even that's not good because now you're going to make them as poor as their counterpart in China. And that doesn't work, so now you're going to make them as poor as your counterpart in India, and that's really freaking poor. I was in India, and they have a ship's graveyard there, okay? It's an amazing place. And what happens is they get these old, rotten, rusted freighters, and a lot of them, and the captain gets full speed ahead. And what he does, he drives this vessel onto the shore. And then all of a sudden, there's like 1 million ants. 1 million! You wouldn't believe this. And they're taking the boat apart. And you can watch the sheet metal come off of it, and they're stripping the wire out, and they're putting the glass in a pile. And it's like 1 million ants just eating his boat away, okay? And no place in the world does make any sense because, the labor is so cheap there that they have this wonderful business of scrapping out boats only because they got these workers who pay nothing, okay, sleep in the rubble, okay, steal a little bit of steel or something they can bring home, and pay them nothing. So if you're paying your workers nothing and you're paying them something, the something business that is disadvantage. Now you can talk about America great again. American workers, by God, the best worker in the world. Bullshit. The American worker is the smartest, most efficient in the world. Double bullshit. The American worker can compete with anyone. We can compete with no one, okay? And the only way you compete is the way the Germans do it, and that's you produce a high-spec product. So how does Germany do it? Well, they produce a Mercedes, and they produce really high-spec automobiles, and they sell them into markets where the game is rigged. You understand? Yeah. Yeah, in other words, they keep the duty high on anything coming in, and they create an artificial market. That's what Donald Trump calls unfair trade. That's what trade is. Trade is unfair by definition. It's to give advantage to your people over someone else. So the bottom line is Donald Trump has been pissing all over himself. As Kudlow says, economic growth will top 4 for a quarter or 2, but not 3 or 4 or more, which means the recession starts kicking in. Trump is starting to scratch his ass and realize that, and now he's got the trade war from hell. How does he deal with it? Here's a little secret. He doesn't. We're going into a recession. He has no position but to continue the trade war and blow enough bullshit up the Trump's asses that they, when they're looted out and their medical marijuana out and their opioid out, they can't figure it out, and they'll vote for him and his party and maybe protect them from an impeachment. So that's the whole game. But the problem is Donald Trump is roaring mad at the Federal Reserve. He's lashing out at them. Again, not very smart. In other words, what do I find with Donald Trump? Every day he invents a new way to be stupid. Every day he drives markets against him when he should be driving them for him. If you understand that, then you understand the tragedy that we face, okay? So all I can say to you is this, my dear friends. There is a fortune to be made with Donald Trump and the Trump. There's a fortune to be made in a dollar that's going stronger and gold is going to crash and continue crashing like you see it. There's a fortune to be made in interest rates that are going lower in the long end and higher in the short end. There's a fortune to be made as the forced liquidations come along and you can buy palaces and castles and yachts and jets and jet planes at 10 cents on the dollar or less. Okay? And I'm sorry if, the real estate market's really strong here. Yeah, we're doing really, really good here. Yeah, you see, it's different in Florida because everyone wants to come here and retire. And it's different in Washington, D.C. because it's the capital. It's different in New York because it's the financial capital. It's different in Chicago because you get to kill people with guns. And it's different here in Detroit because we are the manufacturing hub. It's different everywhere. But then again, it's not so different.